This week on Market Makers Double Bill, we showcase the success story of IIFL. How the co-promoters of IIFL, Nirmal and Venkat, have managed to create a financial behemoth, a billion-dollar company in less than 10 years.
On Double Bill today, a story of small beginnings and great accomplishments. It all started at a Vada Pav stall for Nirmal Jain and R. Venkataraman before they got together to lead India Infoline to greater heights. Nirmal founded the brokerage in 1992, but it wasn't before 1998 when Venkat joined him. And they haven't looked back since then. Their roles are clearly defined. Nirmal chases business, Venkat produces the research. The combo is what they like to call analyzed aggression. That hasn't changed in all these years, and it has clearly worked for them. India Infoline's market cap was a whopping $2 billion at its peak. Join us as we unveil their trade secrets in the next half hour.
Nirmal, Venkat, gentlemen, thank you for joining us on Double Bill. Nirmal, normally friends, they meet at colleges, universities, even at workplace. But both of you, interestingly, you've met at a Vada Pav stall. Tell us about it.
Yeah, I used to work with Hindustan Lever, and Venkat used to work with ICICI. These two buildings were across the street. And during lunchtime, we used to meet at Vada Pav stall, and that's how we became friends. But also, we had a common friend, Girish Kulkarni, and that's how the friendship grew from 1991. In fact, Venkat joined me as a co-promoter much later. Although he knew about what we were doing, we used to exchange notes. And it was in 98 end or 99 beginning that Venkat became co-promoter when we changed the business model from pure research to internet-based .com and targeting more at retail customers.
Right. Venkat, from friends to partners and now co-promoters, what has kept this bond going?
Actually, interestingly, I knew Nirmal for a very long time, and apart from having common friends, we had a common interest on stock markets. And after discussing on stocks, I think we have a lot of common values and shared interests. I think both of us have come from middle class, very humble backgrounds, and both of us, I think, adhere to very high standards of integrity. Both of us are fair people. We are very transparent in our dealings, and I think that's the reason why we stuck on so for such a long time. And together, I think we saw one of the biggest crashes which has happened in Indian markets as well as the economy. I think the period from 2001 to 2003, when we went through a crisis of confidence, so as to say, and actually that brought us close. And I think that was a testing point of our relationship, because that really brought us close. And I think in our relationship, we have always seen that we have shared values and we have common passion, and we stuck along.
It's interesting, Venkat, isn't it? Because normally market crashes, market adjustments, they always break partnerships. They never forge partnerships.
Actually, that actually, as they say, crisis test relationships, and there's a very famous English phrase called "fair weather friends." I think to that extent, I think we have stuck through bad times and good times, and that really brought us closer.
What was the big inflection point for India Infoline, Nirmal, when you went public or when your market capitalization crossed $1 billion? I
think there were multiple inflection points. The first one was, of course, 1999. When we became .com, so we were catering to say around 200 to 50 odd clients, and from there we started, getting into website which will probably cater to 2 million customers or 2 million visitors. And from there, there was a time when we raised our funds or equity venture capital fund for the first time. Then the next point of inflection was, of course, the IPO in 2005, because that got us money, that got us a lot of visibility, and by then we were making profits. Our business model was tested, so we had the confidence to expand quickly and aggressively from that point in time. I think then another point of inflection, I would say, was 2007, when this CLSA team joined us, and from retail only we moved into institutional space as well, and then we added on many more businesses like wealth management and investment banking. So I think these have been the inflection points in our journey.
Venkat, what's next for the company? Today, from being an internet broking firm, you have a market capitalization of less than $1 billion, which is quite remarkable. Is India Infoline the Goldman Sachs of India and making after 5 years, maybe after 10 years?
Actually, till recently we were focused on the domestic markets, and we were trying to cater to the needs of the domestic customer and across retail as well as wholesale. And going ahead, I think the focus will be on domestic customers also, because we want to increase India's under-penetrated, under-tapped market. There's a domestic potential itself is quite huge. But going ahead, I think we have global ambitions also. We have just recently got membership of the Singapore Stock Exchange. We have applied for, and we have got membership of the Colombo Stock Exchange. So going ahead, I think Southeast Asian markets is the first priority. Maybe we'll tap that market, and who knows, the world is beckoning us in days to come.
Well, yes, indeed. World is an ocean, and it really depends on an individual whether you want to pluck out nectar from it or poison from it. Nirmal, for financial markets or financial companies to survive, the financial markets also have to be robust. Characterize the market environment for us, Nirmal.
Market environment in India is very robust. In fact, the revolutionary change or the tipping point was in 94-95 when screen-based trading started. And that actually got another boost or another shot in the arm when we went demat and depository became very popular. In fact, there's almost 99.5% of securities in dematerialized form. The counterparty risk being taken away by NSCCL, and screen-based trading, we are fairly modern in terms of our financial services industry. And that with a very agile and very active regulator. I mean, that has lent a lot of credibility to the way transactions happen. Because I remember I started working and I started trading in stock market in '89. And those days, the Vanza and huge brokerage, Gala, lack of transparency, a small BSE club manipulating Badla, all those things would not have let the market grow to the extent it has grown today, by way of participation of FIIs, mutual funds, as well as retail and wealthy investors.
But that's all passe, Nirmal. Let's, equities are all about trying to dissect future, not analyzing past. At 18,000, 21,000, which was the previous high, you think that is possible in next 6 to 12 months?
18,000 to 21,000 is not too far. See, from the market point of view, what matters is what kind of percentage growth you are seeing rather than the previous peaks or milestones. Maybe there may be psychological barrier from technology, from technical analysis point of view. But I think our markets are fairly priced today. At 18,000 is not a market from where you can expect a runaway bull market. At the same time, I don't think that markets are in a panicky state, or that they are at a bubble or a very high level that one should panic, because fundamentally we are doing very well. And if you see this year, we are probably one of the best performing emerging markets. We have done much better than China. China is down 20% YTD and we are almost flat or slightly positive. Macro fundamentals in terms of economic growth, everything is fairly robust. So I think touching 21,000 is a fair possibility in 6 to 9 months. But if you ask me that, if it crosses 21,000, will go to 25,000, I'll say very unlikely.
Venkat, very unlikely. Why is that? Because markets, when they pick up momentum, when they pick up steam, they first, there is always a bang before a bust. We currently at 18,000 are fairly priced, not richly priced.
See, if you look at the markets, I think I'll just to add on what Nirmal has said, we are at 18,000 quote unquote on the Sensex, but we have concluded a study, and I think 20 equity mutual funds have already crossed that January 2008 peak. And if
in terms of NAV?
In terms of NAV. And if you break the Nifty constituents, I think roughly 25 stocks are over the Jan 08 peaks, which was the last peak, and 25 stocks are below the peaks. And if you again go a bit further down, I think the sectors like autos, financials, consumables, pharmaceutical has done reasonably well, and they are doing very well. And on the laggards, I think real estate, Suzlons of the world have underperformed in a significant manner. So the market is fully priced, and I think this year, if you look at the FI inflows, that has also been very good. So, but what we have to keep in mind is global, I think, clouds of uncertainty that's around the world. And we have uncertainty in Europe, and we have uncertainty in US. So I think the global, I would say the global environment is not allowing us to go and see what we call as a runaway bull market, as what you said, a bang kind of thing. So there will be caution. I think that's the reason why we are not sticking our neck out and saying that there will be a runaway bull market. So I think let the dust settle down. India is in a strong wicket. Microeconomically speaking, India is enjoying its sweet spot. We have domestic consumption doing very well. We have domestic macroeconomic parameters looking so good. We have India as a chosen market because if that's reflected by FI inflows. So all in all, India is doing very well, but global clouds of uncertainty will cast its shadow.